this rally, but don't buy it just yet. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 25th, 2019. So we've had a really impressive rally all year long. It's up over 10%, which would be a good year, and it happened in about 6 weeks. But we have to keep it in context with the dramatic move that we had down last year at the end of the year. And I'm looking at a really good article here in Bloomberg by Danielle DiMartino Booth, and it's how to identify a bear market rally. And the author goes through and makes some really good points about comparing this to previous bear market rallies where the market's going down but has an impressive move up before continuing down. And I continue to hold to that thesis. I agree. But as long as it's going up, I'm going up with it. And again, the author goes through and makes a bunch of really good points, offers some substantial data. And then there's a great closing line, which was my opening line. And the author says, this may be a bear market rally for the ages, but that doesn't imply any investor should do anything other than rent it. Owning it promises to end in tears. What a great line. So, where are we at on a technical basis? Of course, we had this big drop from October down to Christmas. We've had this rally up. We went through the 50-day moving average. We went through the Ichimoku cloud. We went through the 200. So the next level we're watching is this 76.4 Fibonacci retracement line, and it just happens to coincide with a reasonable area of these three, right here, here, and here. Previous highs as it went down into lows, lower highs. So these were all lower highs on the way down, and these look like significant resistance levels. They are right at around 2800 to 2815. So that's the next level to watch for a reversal and perhaps a continuation down in the market. Meanwhile, it's going up, and we're going up with it. And we definitely rented this rally. We've made pretty good profit so far this year, primarily on long trades. So not ignoring the realities, just trying to keep our eyes open to the bigger picture and what could be happening. So here's some things to be watching out for coming up. So here's kind of the big picture as of right now. So the indexes are up for the year, and they are looking a little bit extended. I showed the S&P 500, but the NASDAQ, the Dow, the Russell all look very similar. Earnings season is nearly over, and earnings growth is slowing down. So, earnings aren't negative, but their growth rate is slowing, and that's notable. There's concern building about global economic slowing. Reports last week about Germany slowing down. There's been several reports about China, emerging markets. So there's concern building about global economic slowing. The U.S.-China trade deal, of course, is a really big deal, and breaking news could cause volatility. Headlines today are that the president is looking at moving that March 1st deadline out since they're making progress. But again, that could, good news or bad news could cause some volatility. We got a lot of economic reports coming out this week. We got consumer price index on Tuesday, factory orders on Wednesday, GDP on Thursday, and a bunch of consumer data on Friday. So that will be important and can cause reaction in the market. So I'm looking for shorter term trades, about 3 to 10 trading days. I'm looking long and short, both. Again, renting the rally. Got a little bit of bias to the short. If I see good short setups, I want to be there if a correction begins and get some good. Metals are interesting in terms of what they're doing. The major metals like gold and silver, and energy is very interesting. There's some, oil looks like it's continuing up, and some companies are doing very well with that and some not so well. But there's some price movement there in the energy sector overall that's really interesting. So that's it for this week. I like that. This looks so far like a bear market rally, and like we could continue to lows, but we will continue to rent the rally, but not invest too heavily in it for too long a time frame, and be ready, be nimble when and if it turns down. And if it, we made a lot of profit when this thing went down dramatically, and we're poised to do that again. So that's it. As always, post your questions, your comments, your feedback. Love to hear from you. I try to respond to every single one. Thanks.